Oh man, I just want to fucking enjoy my fucking weekend. Cool. Yep. Okay, let me just pull it up. Okay, great. Okay, great. That's on the phone. Okay, it's got an algo. But does that automatically configure, or you just have to keep doing it yourself, and then eventually? Yeah, let them in. Just chat to them about the week and what's been going on, and then we'll tear in about 5-10 minutes. Okay. Oh, I can hear you perfectly, mate. Is he? I can. YouTube's fine for me. I can. YouTube's fine for me. Yeah, it's working for me. I can. YouTube's fine for me. Yeah, it's working for me. I can't hear you. Can't hear you. Sorry. YouTube's fine for me. Yeah, it's working for me. I can't hear you. Can't hear you. Sorry. It's off. It's off.
Alright, that should be fine. Fan. Go ahead and install here. Alright, excellent. Okay, so let's begin again. And hopefully we have a few more people in here now. Yeah, okay, excellent. Now, you can watch this later if you want to review what we're talking about, but basically NFP, from a day trading point of view, you can think of NFP as very much the most, the game where they're going to try and take money off you. Now, if you go into NFP thinking like this, then you really have to think about where stops are, where the positioning is, where we are currently versus where we are early in the week, and then you try to prepare for some potential outcomes. Now, the data tonight's expected to be around about 870,000. And there's reasons to think it's going to be a little stronger if you read reports, given the seasonality effect right now. And this, Griff,
Yeah.
You got your speakers on, mate?
Yeah, I should. Did you want me to dull it down?
Yeah, dull it down a little. But do you have headphones at all? It's okay if you don't. It's just that your sound comes through onto your microphone from my... it's something we can fix anyway later. It doesn't matter that much. But basically what we're going to be doing here is looking at the best pairs to be playing tonight. Then Griff's going to go through a couple of crypto charts, but also a couple of important, I would say, primers, right? The same way that when I talk to you guys about trading the pound or the Aussie dollar, about what's important, when you're trading crypto, you need to know what's important as well, especially if you're trading not just Bitcoin, but the other pairs. So in a little bit, after we talk about the NFP here, Griffin's going to be going through that. In terms of how we should approach tonight, though, if you approach it as a game, and many nights I approach trading as a game, indice trading especially is daily a game. And on that note, let us have a look at how the DAX is doing. You can't expect a lot of movement before the NFP tonight. You're going to see the market very sideways, and then you're going to see an explosion. Now, you can see the gold is at its lows of the week, testing support down at this 1800 level. Gold and dollar yen and the euro dollar are all going to move a lot. They're all very sensitive here. They're very sensitive to US data because this particular US data can move the bond market and also expectations of the Fed, right? So this is full employment now, like inflation, is a very important aspect of how traders think central banks are going to react, right? So what they're looking for is wage inflation and full employment. And tonight you get wage inflation plus you get your employment numbers. So you get average hourly earnings, and that is a number which can be looked at by the market as well, especially if the headline number is 850,000. That's as expected. So the market will be like, okay, we have to play a game. So is the unemployment rate much better? Is hourly earnings much better? And then if there's something there, the market will be able to use that to either buy the US dollar or to sell the US dollar. And depending on how we're set up right now, the worst case scenario for the market, it's not how we're set up, I'll tell you how we're set up. Worst case scenario for the market would be a strong number. Yeah, that's going to interfere with the nascent rally that we've seen beginning, not just in say the gold, but say something like the euro. It'd be pretty bad if the numbers are strong tonight, and in terms of how much damage it would do to this. Okay, this floor that we put in underneath 118, then the rally failed at 119. This is literally going to be the dip that's bought if the numbers come in weakish. Okay, if they come in at 800,000, 700,000, there's no reason for the dip not to be bought, especially because stocks would like a weak number. The reason stocks like a weak number is because it continues the party. The Fed's going to be in no hurry. If the Fed's in no hurry, then you are going to see the market do the path of least resistance when the stock market rallies, and that is US dollar selling. And then that means that the pair that we care about the most, well, I do anyway, the pound, would be able to continue its rally that it's been trying to do, because it's a leader along with the Kiwi dollar. And the euro dollar is important though, right? So the euro dollar, for us to get back to 142, the euro dollar has to get back to 120. For the euro dollar to get back to 120, then you need to see the market turn here. Like, this is a great place for the market to turn. This is a 4-hour chart, because it's basically a big low, a big higher low, and next up it should break 1819, test 120. Okay, if we get a strong number tonight and we're back down at 117.80, and then we break 117.80, look how we are positioned here on the daily chart. That would be terrible if we broke that low cluster. Right, the market's looking for range trading. Well, range trading to topside on everything. Right, we're talking Aussie dollar, Kiwi dollar, range trading to topside. The US dollar rally was a little bit of a surprise, and if it rallies any more, then a lot of people are going to be in trouble, and that can lead to a new trend. Right, now it's unlikely to rally a lot because the yields in America are like 1.2%. The whole inflation thing's been pushed back. It's not a big deal. And there's reasons to suspect that the Eurozone's Delta variant issues have peaked and are going down. A lot of the countries, Germany and Netherlands, France, the numbers are falling sharply, same as the UK. Whereas in the US, they're in the middle of the Delta variant wave and it's going up, same as Asia. So the Eurozone, although they've got a very dovish central bank, in the ECB, more dovish than the Fed, the relative strength of the economy, and the fact that the US dollar, they're printing so much, and the stock market's so strong, and the risk is on, means that the Eurozone it makes sense anyway that the Eurozone will get support if it was to be perceived as ahead of the curve in vaccinations and in COVID cases, in reopening, basically, the reopening speed. So this is, the main event tonight is going to be the non-farm payrolls. There is some side stories going on with, what's happening in the US with regards to the infrastructure bill. There's a $1 billion infrastructure bill that I think is going to get passed now with Republican help. That helps. That's, doesn't hurt. But if you're looking at the positioning and where the market is, it's really, really bad right now for my pound trades or my Kiwi trades if the euro dollar was to fall out of bed. Now, does that mean that you can play today without touching the US dollar? Well, the euro USD is going to move a lot. The pound's going to move a lot. Sorry, the gold's going to move a lot. And then about an hour later, you're going to get the stock market open. All right, so 10:30 tonight, the NFP comes out. The market goes a little crazy, and then the stock market opens, and then we're back to following the stock market pretty much, especially if the move is over. Okay, and we want the stock market to remain strong. And if you're looking at the Dow, it's been very rangy, but also quite strong. We're at all-time highs, and the Nasdaq as well, all-time highs. There's no reason really to be selling or buying the US dollar in that environment. So it's like a stop sign, an important stop sign. Most important stop sign this month is this data. But if we can get past this data and we close 118.70 or above 119, then it makes trading very easy next week, okay, on the long side. And that's the way we want to be positioning as the most default case, say, right? If the numbers are strong and the US dollar can't rally, that's a huge sign that the US dollar rally is over, okay? And this rally in the US dollar is more of a relief rally. If we're talking if we're talking about the dollar index, which is another way of looking at the US dollar. So the dollar index this is a weekly chart. So the dollar has been weakening most of COVID with stock market rallies and Fed printing money. It put a little double bottom in at that 90 level. It's come back up, but it's failed at a lower high and it's rolled down. But so this is for the guys who are looking for the market to continue lower. You really need this to break back, below that low from last week. And then it's over, right? Then you can talk about 90 again. And if we break 90, third time down, then we've got a huge amount of room to move back to some old levels, like 85, I think is talked about a lot. All right, so this is why it's important for the rest of the month and potential months. If we get above this high, right? If we get above that previous high, then it could be consolidation, it could be sideways trading, or it could be US dollar rally, and it becomes much more messy. Okay. Now, if the market, what we're looking for here is the easiest trades to do that once you have got past this. You don't want to preempt this. You don't want to start trading now, basically telling the market what you want to do. Or if you are going to do that, you want to do it with the strongest pairs if you're playing against the US dollar, because there's so many. It could change the whole landscape. I'm bearish on the US dollar. I don't believe it's going to rally much further, and I don't think the Fed's going to be moving quicker than expected. If anything, I expect there to be more support by the government and the Fed in coming months. Maybe in the next 6-12 months, and then the US dollar is just going to fall back into that weakness mode that is so easy to trade in. Like this area here is so much easier to trade than what's happened in the last couple of months. And it's how the pound gets to 150. So I'm looking for this to happen. But just because I'm looking for it to happen doesn't mean I'm going to start trading it until it's actually a lot clearer, right? So at 10:30, the number comes in weak, weaker than expected, 870. Say it comes in at 700,000. Goldilocks number, 700,000. Strong number, worse than expected, not enough to change the Fed. I mean, the basic game is, does it change the Fed? Is a number weak enough to change the Fed or strong enough to change the Fed? If it doesn't do that, then the technical setups that you have developing should continue, okay? And the argument about the US dollar rolling over wouldn't be much of an argument if it breaks, back below 91.80, right? Like, people aren't going to start buying it again. They're going to start looking right lower. So this little relief rally and stabilization that you're seeing in the last couple of days, say, doesn't mean anything. It's just pre-positioning, all right? It doesn't mean that the US dollar is about to go off the, it bounced off this pretty sharply. This is what happened on Wednesday night when the ADP was really weak and then the ISM was really strong. But the US has Delta variant spreading all through it. There easily could be some states' economic activity dropping off, and easily you could see, because those ADP numbers were weak, this number tonight come in weak, right? But the statistics and how they do NFP reporting, it's pretty hard to be accurate about what the number's going to be. You remember a couple of months ago, those forecasts about 1.5 million and it came in at like 500,000. Like, how did you get it wrong by so much? It's because it's a little tricky, and the stats department can do seasonal affecting. And so if it's strong tonight, it'll be seasonal, or they will also look at maybe looking at previous months and giving them an upgrade, right? So there's ways at which the statistics department can interfere, right? When economics is half statistics, interfere with what you expect to happen. As long as it doesn't change the game, though, we're good, right? So how do you expect it to play? Well, the key topside level. So dollar yen's also in play, but we're just going to focus on a couple of pairs. The most important one I'll be watching tonight is that euro. because it's going to make everything else easier. Or if I was going to trade, I'll trade with gold, right? Gold, it moves the most on such a big announcement. Where did I put my gold? Where are you hiding gold? So this is Wednesday night. Another, you could argue that this is a double top here up on, I mean, this is terrible looking. Like, I don't want to buy that, okay? But something that looks very weak can turn very strong if we get back above 1870. So this is definitely going to be in play tonight. Now, it's not so much that I have this strong... Usually when we play NFP and I give you these guys updates, I'm going to tell you, okay, we can talk about this strategy. Because this is a pivotal moment for the US dollar, it's not safe to say buy the pound now and then if it goes lower, buy more. Because it could turn into a US dollar trend, right? And it's not like the US dollar is overbought or oversold. It's neutral. So the market is literally waiting for a new trend. It's waiting for a new narrative. It's waiting for something that can send us $100 on gold, 200 points on pound, on euro. And that's what tonight's number can potentially give. Either A, because it doesn't change the game and the US dollar weakening continues. Okay, that's all we need basically. And so the gold to finish at 18.15 or euro to finish at 1.1880, then you're going to be seeing next week, what are we doing? We're buying US dollar? Like, why? That number, it's already got past the big danger. And if stocks are still strong, then most likely everything continues higher. So usually, you have this little plan of what we're going to do. Now, what else happens on NFP day that makes it even a little bit more tricky than this particular, is the US dollar going to be good or bad for the next 2 months? The other thing that happens is that you get a lot of whips. Okay, so what's a whip? Well, this was a whip. Okay, big rally, then a big smash. But this particular setup right now for say gold might be something like in 1 hour, market go down, then up. Okay, so say the number comes in 1 million and the US dollar tries to rally and it goes down but then reverses sharply. It doesn't want to rally, even with strong numbers. Very, very, very dovish, bearish price action on the US dollar if it happens. It doesn't have to happen, but it happens a lot more on NFP day than any other day, right? Because they're trying to take money off each other. Take the stops here and then take the stops here, you kill everyone, right? But for us, if we see that, so say you're navigating and you're trading for the first time, what I'll be talking about later, if I'm watching this, I should be, is the price action after the announcement. So it's not just what the number comes out at, it's what the market does with that number. Okay, if it's a weak number and the US dollar doesn't want to sell off much, that's also a problem. Right? That would be confounding, that would be concerning. And if I say tried to buy the gold at 1805 on a 700,000 number or 600,000 number, and it goes up to 1810, then comes back down, I'll be like, what are you coming back down for? Right? And that would be bad price action. That would get me to close out. That would get me to be concerned. It's not like everything's going to be okay because the number was weak. Okay, if you're going to trade tonight, you have to respond to the price action in that first 30 minutes after. Right? I like to trade about either 15 minutes after, just so I can get a little bit more information about whether the market wants to go with the data, whether the market believes the data or wants to run with what the data should happen. So strong numbers should make the US dollar strong, weak numbers should make the US dollar weak. But if that doesn't happen, or if it happens and then it reverses really quickly, which way do we want to be on? Now, because I've already been setting myself up as a US dollar bear here, if the numbers are weak and the euro looks good, the gold looks good, then I'll probably buy a pound. Okay, because the pound has a hawkish Bank of England from yesterday helping it, and just generally they're like the most vaccinated in the world, and I expect the data to be a lot stronger in coming weeks from the UK as the effects of reopening get felt, right? And also every now and again you might get like a free trade agreement announced with another country. Free trade agreement with America would be big when that gets announced. But it's just a way of playing against the US dollar. The other way would be the Kiwi dollar against the US dollar on that weak number, right? Okay, so if you're talking, I don't want to go into too long a detail about it, but basically tonight, I'm going to say strong numbers, market can't hold the gains though. All right, that's a signal to look to go the other way. Weak numbers, US dollar is still strong. That's a problem, right? There's only really 4 possibilities. Weak numbers, US dollar's getting killed. That's the best scenario tonight. Strong numbers, US dollar's strong and looks like it's going to break higher. That makes next week hard. All right, that's the general takeaway. Now, in terms of where do you get the data from? You get data from like Forex Factory, but if your Twitter is strong and you follow the right Twitter people, then you're going to get it really quickly. Just bang, bang, bang. All up there. Every piece of data. What you're looking for though is you can pretty much tell straight away by gold what it does. It's going to move on the headline number. It's going to move by algos, right? But I think that's enough on this particular case here, all right? So from a setup point of view, you shouldn't have too much exposure going in here. It's a very dangerous day. And when we go to buy after the news comes out, or sell, you have to be a little bit sure that the market is happy to keep on going that way and not play games because it's NFP reversey day. Right now, I'm gonna let Griff have a little talk here about crypto, and he's got a couple of charts up. But the thing I find most interesting, when I talk about the markets, I talk about the US dollar a lot, and I didn't get to talk about indices or gold or oil. They are not boring right now, but they're a little high. NASDAQ all-time highs. We'll talk about them on the next one, maybe a bit more in depth on how I trade indices at the start of the session, because a normal day we'd be trading DAX right now, not caring about NFP, but no one's trading right now. Everyone's waiting right now. Yeah, that's why you see profit taking a lot of the times before a big announcement. Yeah, the market just eases off from where it's been coming from. But let's let Griff have a chat about crypto now. I'm going to put it up there. Hopefully this works. I will. How do I make that a little lower? And Griff, what I was hoping that you might spend a bit of time on today, mate, apart from your technical outlook a little and news on crypto, is the way that I trade FX is by focusing on US dollar and getting that right. You get nearly every pair right. You focus on your Bitcoin dominance, you call it. Like, is it a Bitcoin rally phase or an altcoin rally phase? Perhaps you can explain that a little further so that people, when they approach the crypto market, has a better idea of what they should be looking at. I can't hear you right now. Let me see if everyone can hear you. Yeah.
How about now? Can you hear me?
Yeah, beautiful.
How about now? Can you hear me? Second of all, can you see my screen as well? Can you see my screen as well? I've got the Bitcoin dominance up.
Okay. I will double check it, mate.
Okay.
Yep, you're good.
Beautiful. First and foremost, Tony, really well said. From a technical standpoint, you made a very, very convincing argument. You made a very, very convincing
as a technician, I don't really
fundamentals, but
factor in any fundamentals.
It's amazing seeing how you break down. It's amazing seeing how you break down markets and then I actually see those setups being expressed on the chart in preparation for things like NFT. So really well said. Really well said. To gauge both sides of the market. To gauge both sides of the market. Fundamental, technical, and where I step in with the technical. Now where I step in with the technicals is because cryptocurrency just can't trust what you see out there. Just can't trust what you see out there. As a result of that, we find as a result of that, we find there's a higher degree of technical cryptocurrency trading. So when it comes to cryptocurrency trading, so I'm going to basically break down my strategy, dissect from how I start, finish, how I finish, how I then weigh up whether or not we should be trading Bitcoin or altcoin trading, Bitcoin or altcoin.
So, okay. Just one sec, mate. We're getting an echo. We're just going to figure out where that echo is coming from. Is it me playing you? Because I was just checking that you were working. No. Don't. So I think what I'll do is I'll mute.
Okay, I'm just going to keep talking. Just going to keep talking?
Yes, just do that. I'm just thinking logically where this is coming from. I'm hearing you, which means that they're hearing you, and then you're speaking and they're hearing you again. So what I'm going to do is I'm going to...
Okay, echo 1 2 3. Okay, echo 1 2 3. How's that? No echoes, nothing like that? How's that? No echoes, nothing like that? Yeah, that's fine. Yeah, that's fine. on Skype. on Skype. Yeah, Streamception. Yeah, Streamception. Yeah, how do I sound, fan? Yeah, how do I echo much at all, or is it relatively clear? At all, or is it relatively clear? I think he's happy with that. I think he's maybe happy with other people confirm. Maybe have one or two other people without an echo, and I might just crack on without an echo, and then I might just crack on. Yeah, mate. Can you hear me? Yeah. No, a couple of my mates are saying the Skype quality is not too good. Oh, now they're saying echo stop now. Echo has stopped. Could you confirm that with maybe one other person, Tony, and then I'll get cracking? Okay, I've had a few people confirm that they can hear it without an echo, mate. So I'm just going to crack on if that's all right with you. I have been. Okay, I'm going to assume all is well and start cracking on now. Like Tony said, he starts with the DXY, which is the US dollar strength. Okay. Similarly, in layman's terms for cryptocurrency, look at your Bitcoin dominance like your DXY. Okay. The Bitcoin dominance on the on the right hand side shows you the total dominance of Bitcoin in terms of total market cap in the entire cryptocurrency market. So let's say, for simplicity's sake, the cryptocurrency market is $1 trillion in total right now. We have 46.61% of those funds in Bitcoin. And that's where the dominance comes from. You can do ETH.D, which is Ethereum dominance, others.D, which is altcoins, and so on and so forth. Okay, so it's a really, really good proxy to show you where momentum is building. Okay, if Bitcoin dominance is looking strong, you don't want to trade altcoins. Tony, can you mute yourself, mate? There's a lot of background interference. Anywho, so the Bitcoin dominance is essentially like the DXY. If the Bitcoin dominance is looking strong, then you don't want to touch altcoins, okay? And vice versa if the dominance is coming down. So here you can see that in January 2021, the Bitcoin dominance is around 72%. Okay, that's massive for Bitcoin. And since then, around 25 to 30% of its entire market cap has gone into altcoins, and that's what you're seeing there. Okay, which is why we had the really sporadic alt season. Okay, and you would see 5 to 10,000% just on altcoin spot trading alone. At 10 to 20x leverage, you'll become an overnight millionaire literally trading this. But the market giveth and the market taketh. You have to be very, very patient with this. I spend 2 to 3 years building up my positions in this market, and it really, really is a way of the impatient transferring wealth to the patient. So you've got to be very, very calculative with how you break down the market. Now, I start with obviously the Bitcoin dominance, use that like your DXY. Bitcoin dominance is looking strong. I'll just trade Bitcoin. I don't want to risk trading that against other altcoins because, in theory, if the Bitcoin dominance or the Bitcoin value goes up, the relative Satoshi value of the altcoin has to match that same pace or even outperform it to grow further than Bitcoin, right? So we'll get to that in a second, but I just want to focus on the Bitcoin dominance. So as you can see, since January 2021, we've had a massive alt season. That was the catalyst for it here. We've now sort of hit that bottom reversal type of zone around 40%, and that coincides with the all-time lows of the last altcoin bull market in the 2018 in the December 2017 top, which then led to alt season after, as a lot of people started selling their Bitcoin and pumping the illiquid altcoins for massive gains. And that is a way of essentially multiplying your Bitcoin holdings through trading altcoins. And then eventually they cash out of the altcoins. And this time, because the altcoin Satoshi value had risen, comparatively speaking, when traded against Bitcoin, you can then cash out back into Bitcoin and have more Bitcoin than when you started. And that's what this Ponzi is in that sense, okay? Bitcoin rallies, the altcoins don't rally as much, so their Satoshi value drops. Eventually, Bitcoin rallies so much that the amount of money that has to keep coming into it is almost too risky and the undervalued altcoins that have had their Satoshi value drop become more attractive from an undervalued standpoint. So they start selling Bitcoin and buying altcoins with that Bitcoin, okay, such as Ethereum, a couple that I like, Mana, Engine, Rarible, Uniswap. And as that Bitcoin dominance drops, the altcoin Satoshi values start rising. So when you cash out, you've got more Bitcoin, okay? And that's how this relationship works, okay? So you've got to be very, very, very time specific here, and you've got to stick to your guns. We'll look at the weekly for this. We start on the weekly time frame and then work our way within. That looks like a double bottom to me. If you're getting into altcoins now, in my opinion, you are bloody insane. You're asking for trouble, okay? Just because Bitcoin's value is going up and the altcoin's value is also going up because the altcoins are pegged to Bitcoin and Bitcoin's pegged to the US dollar, it doesn't mean they're outperforming Bitcoin's growth in the relative Satoshi value, okay? And that's what you need to watch out for. Because even though the altcoin's dollar value might be going up because Bitcoin is going up, its rate of growth may be less than Bitcoin. And if you were converting Bitcoin to that altcoin and Bitcoin was going up while the Satoshi value was going down, you were just better off holding Bitcoin. And the best way to determine this is with the Bitcoin dominance, okay? So as you can see, we had a massive bottom here at around 2018, the early months of 2018. That's when the alt season started and the bear market began. And you can see that with the uncertainty in the market during the bear market, more and more people sold out of their altcoins back into Bitcoin. And that's why the dominance in terms of a percentage standpoint was increasing with Bitcoin. Eventually, risk on sentiment returns and people start converting their Bitcoin for more altcoins and the Bitcoin dominance goes down. When that happens, it usually causes an altcoin party, and you're better off being in altcoins as the Bitcoin dominance is trending down. We've now sort of hit that massive double bottom here, and the Bitcoin dominance is bouncing up, which means Bitcoin strength is essentially rising as well. It's not a good time to hold altcoins. So that's how I like to start. As you can see, Bitcoin dominance is looking bullish from a macro weekly setup. We'll then look at the daily. And you can start to see that using your horizontal support resistance, you'll see that Bitcoin dominance is really sort of gearing itself for a breakup. Now, if risk on sentiment is still in the market, then chances are the Bitcoin dominance will continue hovering around the mid 40s, the 50 zone, possibly even lower, and the altcoins will continue rallying. Now, if that argument is invalidated and the Bitcoin dominance starts rising, then one of two things is probably happening: a halvening or a bear market. This is why using Bitcoin dominance as a proxy is very, very important. It's a very powerful tool. So we've been bearish for the last couple of months, and that's why the Bitcoin dominance looks like it's going through a bottom reversal. That being said, it still looks quite neutral to me. Similar to how the DXY is looking at the moment. We're waiting for either bearish sentiment to creep into the market again, and that will cause people to get out of their more speculative trades back into Bitcoin and play that, or vice versa as the Bitcoin dominance breaks down and risk sentiment increases, and you'll see money going into altcoins. Now, one altcoin as of late that's been sucking a lot of that dominance out of Bitcoin is Ethereum. I'm not too sure if you're aware, but Ethereum has recently upgraded to the EIP 1559 protocol, and it is now a deflationary asset, meaning that when Ethereum transactions are Ethereum transactions are initiated, you use Ethereum gas as a fee to initiate the transaction. That's like a transactional fee, okay? That fee is now being destroyed and burnt forever. It will not return, okay? So as more and more people transact and farm Ethereum using NFTs, DeFi, DAOs, things like that, technically speaking, the Ethereum's getting more and more scarce. And some statistics came out today. If Uniswap, the decentralized exchange powered by Ethereum gas, continues at this rate, it will burn 350,000 Ethereum per year alone. not factoring in any other Ethereum transactions on additional networks, let alone the ETH network itself. So I am very, very, very bullish with Ethereum. That is my nest egg. I personally think it has more utility than Bitcoin. That being said, though, when the Bitcoin dominance is looking strong, every altcoin is at the mercy of Bitcoin, even Ethereum, okay? So now that we have a fundamental understanding of the Bitcoin dominance, in my opinion, it looks like it's getting ready to reverse and break higher. I wouldn't want to trade altcoins under that sort of top 25 market cap. I'd want to stick with the big caps: Ethereum, Ripple, Litecoin, Binance, Polkadot, Uniswap, things like that, or just stick with Bitcoin itself and wait until the Bitcoin dominance starts looking bearish again. It's quite neutral at the moment, so like Tony had mentioned earlier, it's waiting for a new narrative to sort of come in. Now we'll move across to actually charting Bitcoin. As you can see, we've had a nice 50-60% correction. We draw our fibs from swing high to swing low. And as you can see, we're already starting to marry up with the pivot levels here, okay? That looks like a breakout and a bullish retest to me. We'll get our horizontal zones on there as well. You can see that horizontal resistance has now been flipped into support. So we'll then turn that into a green zone. We now want to see Bitcoin start heading up towards the 200 daily moving average here, okay? Being below that 200 daily moving average is bearish, being above it, and this correction is officially over. And we should start now heading back up to the 618 pivot zone here at around 51.52. And we will go from there. I do apologize, a colleague's just messaging me. And we will go from there. Now, where I see Bitcoin heading from here, I personally think it looks like it's hanging tight for that NFP announcement tonight at 10:30. A lot of these setups look like they're heading into resistance or shorter term resistance in preparation for that announcement at 10:30 tonight. And like Tony said, we have that announcement at 10:30. The US stock market opens at 11:30. And we want to wait maybe 5 to 15 minutes after that to see how the price action is to determine whether or not it's still risk on or risk off. If it's risk on, then in my opinion, that's bullish for Bitcoin. You'll see money start coming back into it. If it's risk off, then you might see Bitcoin come up and tap resistance here. That could be the bearish retest and we then start heading down again, okay? Vice versa, if we're bullish, got a lot of work to do with Bitcoin. Vice versa, if we're bullish, what we'd want to see is us closing above this pivot zone here. That would then put in a higher high compared to this 42 grand high here. And then the next step for Bitcoin would be to retake this uptrend support, which is now resistance after breaking down. That being said, should that occur, we would have likely closed above the 1-day 200 moving average at 45,000, okay? And that is probably one of the most significant technical events you can see on the charts with Bitcoin. What I also like doing is looking at past data for Bitcoin as well. You'll notice that when we fell below the 200 moving average, you can see that it's acting as resistance here. And it's very, very similar to the 2017 top in December here, where we hit that all-time high at 20 grand. We dropped around 50-60%. Closed below the 200 moving average, and then it became resistance. And for 10 months, we kept tapping that and breaking down. Eventually, after 10 months of being suppressed by it, the buyers were just completely out of steam here. There was no buyers left, no demand left. They'd all been sucked into the market. And you can see the seller pressure picking up here in the shape of the descending slope. Coiling tighter and tighter along that horizontal support here. And that, in essence, has now created a descending triangle, which by nature is bearish. And even after holding such a significant support zone for 10 months after dropping 70%, losing it still caused another 50% drop from 6 grand to 3 grand here. So You can't make this stuff up, and I generally think Bitcoin is still caught mid-correction here. I do have slight bearish bias because we're still under that 200 moving average, and buying here as we head up into it is rather insane in my opinion. And that's why I think we're also seeing the Bitcoin dominance rise as a result of that uncertainty being expressed on the charts, okay? So what Tony will do in the next couple of minutes is work out ways to mitigate our risk and exposure with Bitcoin and cryptocurrency, more specifically focusing on Bitcoin and options where you pay a fixed premium, and that is all you can lose until the term duration to expiry, okay, or unless you close it out. So I'll let Tony build on a more fundamental understanding of the options, the calls and puts, call being a leverage buy, put being a leverage sell. And yes. Yeah. Yeah, I can. Oh, of course, with the NFP.
All right, guys. Just now, Griff, can you talk a little bit as well? We just want to see if there's an echo there because it'd be good for us to have banter in Tambi chat.
Yeah, sure. I'm just writing out the bullish and bearish arguments for Bitcoin.
Well, there's definitely echo because I just sort of heard my echo. Where's where?
I think that might be my dad. Bear with me. He just got home. All right, the big guy has been silenced. I apologize for that. Gotcha. Well, I've pretty much finished up with Bitcoin there. Bitcoin dominance, if it's going up, just trade Bitcoin. If it's going down, look at the altcoins. Look at your Bitcoin dominance like your DXY. It will determine the tone in the market and the narrative. With Bitcoin, here are my expectations. This, funnily enough, lines up with the NFP announcement tonight that's happening at 10:30 in about 4 hours. So I wouldn't be surprised if we actually have like you said, a bit of volatility up around the 42,000 zone as we break up in preparation for maybe a bullish announcement, which might shock the market if it comes out negative. And as a result, we reject from the resistance here and start coming down again. Conversely, if it reaffirms that risk on sentiment in the market and pushes that risk on narrative again, then I expect us to break back inside that uptrend support here and then start chipping away at the 200 moving average resistance, which is around 45,000, okay? While we're approaching resistance, it's generally more opportune to trade altcoins. So meaning that Bitcoin sells off, it's at resistance. It's going to take more money and volume to get it above that resistance. So what they do is they start selling the Bitcoin for altcoins. Okay, we'll look at the Ethereum BTC pair for this. Okay, you want to have a very fundamental understanding of what Satoshis are. Look at them like pips for a Bitcoin with FX. Okay, instead of pips, I'm trading Satoshis, Bitcoin being the base currency. All right. Now you can see Ethereum BTC has been trending up, and that means it has been growing at a faster rate than Bitcoin. So even though Bitcoin has gone up 5%, the Ethereum SAT value going up as well might mean Ethereum USD is actually going up around 8 or 9% growth, okay? So it's again very, very important to follow that dominance if you want to get the most profit out of your trades.
Can you quickly look at
yes,
at Ethereum for us in the sense of, like, say we in the current market, all that excitement, if the other traders are like me, I sort of feel like I missed the Ethereum boat. It seems to be almost rallying without Bitcoin by itself, and people are pretty excited. If Bitcoin just goes sideways, is there worlds in which Ethereum can go much further by itself?
Yeah, absolutely. And that would be when Bitcoin hits that major resistance and starts chopping sideways. Because the market will require more buying volume for Bitcoin to get above that resistance and start heading higher to maybe 50,000. What they try and do is they sell the Bitcoin for the altcoins. The altcoin's value rises, and then they sell the altcoin back into Bitcoin, but this time for more Bitcoin, okay? And that's how this Ponzi-esque relationship works. Bitcoin rallies, Bitcoin sells off, pumps the altcoins. The altcoins pump, then they sell off back into Bitcoin. Bitcoin pumps like that, and that's how it keeps going up. So it's very Ponzi-esque in essence, especially when you've got stable coins like Tether and USDC that are just getting minted like that, creating fresh liquidity to inject into the market and create these artificial floors. So you guys got to know what you're getting into. It's the wild west here. And
say it turns into a down market in Bitcoin, is there worlds in which it can be still well supported or hold its own?
I think best case scenario is what you're seeing now, where Bitcoin is sort of chopping sideways and Ethereum's rallying based off that really bullish fundamental upgrade, which is the EIP 1559, thereby making it a deflationary token. So now that you've got all these NFT farmers, these DeFi farmers using the Ethereum ecosystem with that deflationary mechanism now, the more and more ETH that's transacted, the less and less there's going to be left in the supply.
How deflationary was it? Like what number are we talking?
So in the last 12 hours, 24 hours, around 2,000 Ethereum has been burnt.
Say 2,000 a day. How many Ethereum in circulation?
Over 100 million.
It's too big.
So it's deflating by around 0.7, 0.8% a year.
It's good, but it helps, and it's a good story, right? Like, it helps with the idea, but I think the bigger, you can't trade off it, right? You can't buy and hold it because it's not Hex.
And that's exactly right. The market sort of FOMOs into something really, really bullish from a fundamental standpoint. Then the announcement occurs, EIP hard fork has just, the London EIP 1559 hard fork occurs. The market then waits for, like you said, the price action. It doesn't go according to their expectations. The market then rationalizes.
This is not the big one, though,
formed.
This is the.
This is one of the biggest, but there will be multiple upgrades over the next couple of months and years. This is the first major one heading towards proof of stake, and that's by becoming a deflationary asset by burning.
Doesn't that get rid of the gas fees? A lot of them.
Proof of stake makes it more scalable and faster to transact. Okay, and instead of using mining equipment, so graphics processing units that you'd use in a mining rig to mine Bitcoin. You're moving away from that, which is proof of work, to proof of stake, which is you're taking the 100 million Ethereum that are currently out there, buying them, and then staking them on the Ethereum network to create nodes and decentralizing it that way, okay, with little pieces of nodes interconnecting the web that goes out like that. Well, the nodes get paid look at it like a dividend. They essentially, yes, the gas fees get paid back to the nodes.
Will decrease though once the full upgrade's done.
That's a good question. For the time being, no. I think what will happen is because that's a really good question. To be honest, I don't know how Vitalik's going to tackle that. And that is the argument. To be honest, yeah, Kanj might know as the head of altcoin research for Kraken. It's a really good question because we're moving towards a deflationary asset. Proof of stake essentially rewards the node holders with Ethereum for decentralizing the network. Are those gas fees that are being burnt going to be paid to the miners, or is new Ethereum going to be minted to pay those node holders? Yeah. So that again will be another major turning point. But the best part about these ecosystems is that they're decentralized autonomous organizations. They're voted upon, okay? And it comes down to community consensus. Not all of them are like this, but mate, what you're seeing here right now, in my opinion, is the birth of the Internet 3.0 and the financial system 2.0, and the charges being driven by Ethereum. So my nest egg is not actually Bitcoin, it's Ethereum. I want to trade altcoins against Ethereum and increase my Ethereum holdings. That way, I think Bitcoin is a store of value, and without it, the market wouldn't exist. You wouldn't be able to trade Satoshis for altcoins and do that, for example. But in terms of real world utility and scalability, fungibility, you're looking at Ethereum. That the ecosystem for Ethereum, the Ethereum network, is massive, absolutely massive, and it's only going to go up in my opinion.
But we can't buy it right now. Yeah.
No, God no. Obviously, it's going to be volatile, and you'll have your uptrends and downtrends. But the long term trajectory, mate. 2017, this was $7. That's what I was getting.
Yeah, I know, but we saw that move from 1800. That's like a percentage-wise, that's a huge move compared to.
That's massive. But crypto boom and bust cycles are parabolic. You break that parabola, 85%, 90 correction. You wait 3 or 4 years in preparation for the next Bitcoin halving. You reaccumulate in preparation for that.
I think the next video, you're going to have to tell us a bit more about Bitcoin halvening.
Oh,
because I don't know, but it sounds
absolutely.
It sounds like something they used to do back in the day. The quickening.
I generally believe that if you don't participate between now and the next halvening, after the next halvening, you will and truly have missed out. You will see $200,000, $300,000, $400,000 Bitcoin sub $10,000, $20,000 ETH because they're both deflationary. And what you're seeing right now is an accumulation game, in my opinion. And you guys wanted institutional guys to get in, and they're going to make it very, very painful for you guys now. It's
what about
very, very interesting.
The regulation risk? You heard about that's coming. I want to buy after the regulation, so I know what I'm getting into. And regulation risk isn't that bad for Ethereum in a proof of stake, is it?
It's more the SEC needs to come up with regulatory guidelines for cryptocurrencies. Are these like a sub commodity or a sub utility, a security? And in my opinion, mate, the SEC's run by a bunch of dinosaurs. They actually don't know what they're doing. They don't know what this is. They don't understand how to check the spam in their email. What makes you think they're going to understand the next layer of the internet taking place? And if you want to take out cryptocurrency, I think they've realised that you've got to take down the entire financial system. And it's going to be a very, very sure thing of if you can't beat them, join them. And then how can we monopolise that? So I think this is that first squeeze in terms of regulatory compliance coming into the major exchanges like Binance and FTX. That's going to suck out the liquidity. Banks and regulatory bodies are going to make it hard for people to get money into crypto, make money and take money out of cryptocurrency. Then you're going to maybe see a Bitcoin ETF, more SEC ICO guidelines, and then I think it's going to be
we need an Ethereum ETF,
literally.
If you want to get more Ethereum money. We don't want to be the second place to Bitcoin in the whole world. It's.
And that leads me to I suppose the conclusion here with the value investing with cryptocurrency and altcoins. Don't look for ETH competitors, because ETH is going to be the one that wins this race. Look for altcoins that scale with the ETH ecosystem, that complement it. Okay, Aave, Matic, Uniswap, NFT platforms, for example, that use Ethereum gas for transactions. Don't look for competitors like VeChain or Cardano, because once ETH scales, what's the point in having the competitors there? It might look cheap because Cardano is $1.50, but there's 10 trillion of them, I think, or 10 billion of them, or something like that. So the market cap, people actually ignore, which is 1/10 of Ethereum's at the moment. But all they see is the value of Cardano currently, which is $1 something, compared to Ethereum, which is $2,400. Okay,
but that's a big thing in shares, and that's why they do splits, so more people can buy.
Yeah, you can buy partial bits of Ethereum, buy partial bits of Bitcoin, and in my opinion, in preparation for the next Bitcoin halvening, Bitcoin still might, if we go through a bear market, you still might see sub 13, 14, 15,000 US dollar Bitcoin. That's a lot of money to some people. That's a 5% house deposit in the right area around Australia. With Ethereum, you might see it around 500-600 US dollars. Still might be expensive to some people. So look at the altcoins that complement and scale with the Ethereum ecosystem. When we get that bear market and prices drop 85, 90, 95, 99%, get in and start accumulating them, okay? I'll leave you with a few pieces of gold, and this is not financial advice, but altcoins that I will be accumulating that complement the Ethereum ecosystem in this next bear market would be Matic, Polygon, Uniswap, Engine, and
Excellent,
Mana.
Man. Thank you so much. Look, I think a few teething troubles, but we'll try to do this a bit more regularly, and we'll get better and better, and I'll figure out exactly what happened. I think I had a YouTube from the test from earlier back in the day running, as well as just our settings. But very good. I'm learning Bitcoin as well, mate, and crypto through you, since you came and joined us. And I don't know if it's a good or bad thing. I suppose I made money, so it's a good thing. But Jesus Christ, it's been pretty wild.
Mate, I'm 27 and I'm starting to get grey hairs from being in this market.
Yes. I just wish there was a little bit more fundamentalness to it, that I could understand the flow or narratives. That Musk stuff, that just, I hate that sort of thing where it's...
Oh, but he's allowed to do it in an unregulated market, and I sort of blame the SEC for that, because they still, they just don't know what to do. They don't want to harm the innovation being born here. At the same time, they probably want to get in themselves. The Fed has one of the largest Bitcoin treasuries in the world, if not the largest, and the stable coins as well. Tether,
that needs regulation,
being minted by Bitfinex. Yeah, absolutely, mate. Absolutely.
Man, I'm not even. I told you the other day, I'm not keeping my Tether in Binance. I'm changed it to US dollar coin.
So, and that's the question. If Tether is actually a scam and it has to be halted, people are going to panic. They're going to sell their Tether and hop into Bitcoin. Bitcoin's just going to pump in terms of the USD pairs, and then they'll look for an alternative. US dollar or the Fed stable coin. So you're so early in this space still, okay? Look at this like a primordial soup, and you've got another 5 to 10 years, in my opinion, before you start seeing this market really take off with real world use case applications. And I can't wait as a millennial that's looking to get into the next major investment after seeing you guys with the golden decade, housing, stocks. You guys have had it all. Let us have this,
We'll let you have it. You just got to pay tax. That's it. That's all they're coming for. They're not coming for... They don't care about money laundering. They care about tax.
That's it. And that's my conviction. That's my belief at the end of the day. I think this really is a genuine asset class being born, and that's why I'm here. I'm not going anywhere. And if you're here to just come in, make a quick buck and leave, then good luck. You're better off. I think you're better off just learning to FX scalp, and that in itself is where 99% of people lose. It's going to be 99.99% of people losing in here. The only way you win in this stuff is being patient, following the macro trends, learning how to follow the dominance, Bitcoin, the altcoin relationships, the halvening cycle. I will do a really comprehensive video on that soon. But yeah, patience pays with this. Build a portfolio of assets first, then use 10 to 20% of that portfolio for trading. If you make profits, use the profit to then go back into the portfolio and buy more of the assets that you want to invest into long term. Then when those assets start really taking off that complement the Ethereum ecosystem, most of those are proof of stake, Tony. So they're going to be needing their mainnet to be launched. They're going to need node holders, for example. So much innovation, so much opportunity is still going to be born moving forward. And the NFT platforms, the DAOs, the DeFis, they're probably the big three that I'm going to be looking for. And most of those are going to be born on the Ethereum networks, okay?
Hopefully by then I understand what you're talking about. I'll be... look, it's not... It's hard when you come in at this stage, I think, to understand the DeFi, the DAOs, unless you're doing it, you know what I mean? Or really, really invested in it and doing it yourself. It does seem very odd, the percentages that interest rates that they're getting in crypto. It's unsustainable for sure. Yeah.
It's a bubble. It's a massive bubble. Some of these yield farms and whatnot, but... what game isn't rigged out there, to be honest? Market isn't rigged.
Wall Street, once they learn how to make money, is just going to come in and make money, mate. That's it. Probably buy out some of the big stock exchanges, or buy out Binance or Kraken or Coinbase, Yeah.
And that's it, the CME futures charts, uranium, Bitcoin, Ethereum, Palladium, like you can see it, you know what I mean? They just send it, and then after they send it, these things go into bear markets for years. And don't shy away from the next bear market. Use that as an opportunity to get in low, because you will have to go through the 3 years of this bear market to enjoy the 12 months bloody sporadic 5, 10, 20,000% gains.
I think I've sold 10%, maybe 5% of all my trades in crypto have been buying. 95% have been buying. So the sell side is something that I have to learn. It seems very stock-like in the crashiness of it. So it's like indices, fear. Once the fear starts, you can work upon it. But the reversals, man, like they're just outrageous.
Oh, they are quick, and that's because you're going into battle with whales that have tens of thousands, hundreds of thousands of Bitcoin that just call up another whale and say, mate, let's load some shorts on this exchange, and I'm gonna market sell 1,000 Bitcoin right then and there. They 10x their money, and then get back into the market. It's
that front running sort of thing. That regulation will stop that as well. But let's see, mate. Let's end it there.
Save that for another conversation.
That's
next Friday.
Very, very good, very good. And we've got lockdowns for an extended period of time now. You'd think so.
Yeah, more people at home with time to learn trading, and that's what we're here for. We really sort of pride ourselves on that tailored mentorship piece to give you guys the best chance possible in becoming self-sufficient and not having to rely on people like Elon Musk coming in and pumping things like Dogecoin.
Than a client learning to make money, and doing well, and then withdrawing before he does badly.
NFT. Yeah.
We talk about that a lot as well. The most dangerous time as a trader is after you've made a lot of money. That's but mate, excellent. I'll be updating later anyway the NFP, and we'll do it again next Friday. Huh? That's excellent.
Yeah, and we'll use options then after the NFPs come in. Volatility has gone down, premiums would have gone down as well. And we'll do some really nice demo trades even in preparation for the weekend.
All right, mate. Very good. Well, I'll update the chat room later for the NFP and my thoughts on the price action. All right, we'll talk soon. Cheers, mate.
Beautiful. Thanks for having me. Thanks, everyone.